The miners produced 830,000 or 830 million ounces of silver this year approximately. So you'd have to hold back quite a lot, to impact that market. And, the big guys are all, as I said, concentrate producers. Yeah. So the big group out of Poland, a lot of the big mines in Mexico and in Peru, Argentina, these are all concentrate producers. So, holding back their metal is almost impossible. Yeah. If you're a doré producer, as we are, because we've got 3 mines that are producing doré, we can just put it in a warehouse. Yeah. Right? And it's much easier. You would have to have the whole silver industry do it together. Yeah. And in my discussions with other CEOs of other silver companies, because I have had these types of discussions. I remember it was a couple of years ago when silver was down at like $14. I think it was in June of 2017 or 2018, I forget. But I was at a meeting with a whole group of the CEOs, and I said, why don't we just say in June, we're going to hold back all our silver. We're not going to sell any silver in the month of June. And that, they all looked at me like, I've been selling silver for a long time. The silver story. Silver is always looked at as, or not always, but predominantly looked at as the poor man's gold. And I'm always saying, no, it's not gold. Gold is money. Silver is a strategic metal necessary for everything that we need to do as a human race. So we want to go green. We want to create computers and create nuclear plants and electric cars and all the things that we're trying to do to clean up our electrical grid throughout the planet, and even supply energy and electricity to parts of the globe that currently don't have electricity. We're going to need a lot more silver. And people need to wake up to that story and need to have silver as part of their portfolio. People get frustrated with me when I say that, because there's a lot of people out there that believe that silver should be a currency and should be part of our financial system. It's interesting enough that the Russians and the Chinese and the Indians are buying silver, for their central banks. So, I could be wrong with my thesis, but I just think that there's so little silver around, and I have a chart on my presentation this afternoon that shows that there's about 1.2 billion ounces of inventory on the surface of the Earth currently, and that's 1 year of consumption. So there's only 1 year of supply available, and that's how are you going to produce coins? How's the government going to actually introduce silver into the financial market? I don't know how they can possibly do it. Gold, you could, but gold is somewhat difficult because there's such a high value, and you're going to walk around with an ounce of gold in your pocket to buy a loaf of bread. It makes it tough. Silver would make some sense, but look, I think that industry needs silver to do all the things that we've talked about. Absolutely. And I think that's where most of the silver will be going. There'll always be a market, for coins and bars and so on. And that's the market that we're trying to supply. That's why we opened up our own mint earlier this year, and we're happily selling silver to retail investors around the world.
Keith Neumeyer's commentary on the silver market provides a crucial lens into its dynamic nature, challenges, and long-term prospects. His candid insights reveal the complexity of dealing with a commodity that serves as both a financial instrument and an industrial necessity. The silver market's volatility, often coupled with its dual roles, poses unique challenges to miners, investors, and policymakers alike. At the heart of the discussion is the idea of withholding supply to influence market prices. While Neumeyer acknowledges the theoretical appeal of this strategy, the practical hurdles are significant. Most major silver producers are concentrate miners rather than doré producers, making it logistically challenging to withhold silver without disrupting their entire production and sales cycles. The broader implication here is that any coordinated effort to restrict silver supply would require unprecedented cooperation among global miners, many of whom operate in vastly different economic and regulatory environments. Neumeyer's anecdote about attempting to rally industry leaders to withhold silver during a low-price period underscores the fragmented nature of the market. Unlike gold, which is primarily viewed as a financial asset, silver has a crucial role in industrial applications, from electronics to renewable energy solutions. This dual role complicates any efforts to position it purely as a monetary asset, as its availability directly impacts industries striving to achieve ambitious sustainability goals. The ongoing debate about silver's identity as a poor man's gold or a strategic industrial metal captures the essence of its market challenges. Neumeyer firmly rejects the former label, arguing that silver's true value lies in its indispensable role in modern technology and the green revolution. From electric vehicles to solar panels, silver is a cornerstone of the technologies that are shaping the future. The fact that central banks in countries like Russia, China, and India are accumulating silver adds a fascinating layer to its narrative. Could silver eventually find its way into monetary systems as a reserve asset? While Neumeyer remains skeptical, the possibility highlights the evolving perception of silver in global markets. The supply dynamics of silver further underscore its unique position. With only about 1.2 billion ounces of inventory globally, roughly 1 year's worth of consumption, the market operates with razor-thin margins. This scarcity is both a challenge and an opportunity. On one hand, it raises questions about how governments and industries will secure sufficient silver to meet rising demand. On the other, it sets the stage for potentially explosive price movements as deficits accumulate and inventory levels dwindle. Neumeyer's reflection on the price volatility of silver over the years paints a vivid picture of the market's unpredictability. From hitting $50 per ounce after a decade-long rally to plunging to $12 and lingering between $12 and $15 for years, silver's roller coaster journey has tested the resilience of miners and investors alike. Yet despite the setbacks, Neumeyer remains steadfast in his bullish outlook, coining the term triple-digit silver to capture his conviction in its long-term potential. The conversation about the structural deficits in the silver market is particularly compelling. With annual deficits of 300 to 400 million ounces, the supply-demand imbalance is becoming increasingly evident. The ratio of paper silver trades to physical silver, 240 to 1, is another striking statistic highlighting the disconnect between market speculation and physical reality. This disparity, Neumeyer suggests, will eventually correct itself as industrial buyers like Tesla, BMW, and Sony must secure actual silver to meet their production needs. The recent rally above $30 per ounce, he argues, may well be the beginning of a broader awakening to silver's strategic importance. Neumeyer's pragmatic approach to navigating the silver market is evident in his long-term perspective. While daily price movements can be frustrating, particularly for retail investors, he emphasizes the importance of looking beyond short-term fluctuations. For First Majestic Silver, the focus is on building a sustainable business that can weather the highs and lows of the market cycle. Acquisitions like Gato Silver are made with a 5 to 10-year horizon in mind, reflecting a commitment to creating value for shareholders over the long term. Ultimately, Neumeyer's message is one of cautious optimism. The road to triple-digit silver may be bumpy, but the fundamentals, rising industrial demand, constrained supply, and increasing awareness of silver's strategic value are aligning in its favor. For those willing to endure the market's volatility, the rewards could be substantial.
Timing the silver market's always been a pain in the ass. I put this company together, as I said, over 20 years ago. So, I predict when I put the company together, I predicted $50 silver. It happened. It took 10 years to do it, but it hit there. But I didn't predict that silver would drop all the way down to 12. And stay between 12 and 15 for a couple of years. And that was very difficult. We had to lay off a number of people and curtail exploration, curtail development, and we had to sell a couple of mines and lower profitable mines. So it was a challenging environment. Now we're back over 30. Today's a great day. I'm sure you're watching gold and silver today.
A little bit.
Yeah. So we're having a great day in the market today. But look, I'm a bull on silver, and I always have been. You know me. I came up with the phrase of triple-digit silver years ago. I've seen other people copy that phrase now, so hopefully I'll be right. I think I will be ultimately, but silver is a bit of an annoying metal. If you look at the chart, over the last 20 years, it's only hit $30 3 times in our lifetime, actually. So you go back, even longer than that. So it is a bit of a psychological resistance level. So once it does break out, I think it's going to be pretty amazing move after that. But it's got to consolidate. It's got to jump around a little bit. And seeing gold pop through 2,700 today and silver now strongly above 31. Maybe this move will start to start again. But we're going to the year end. We're going into Christmas, and generally December's not normally
seasonally weaker.
Yeah, seasonally weaker. So, but January, February, March could be very strong months. But like I didn't, we didn't buy Gatos because we think silver is going to move tomorrow.
Yeah.
I can't really think like that. I have to look at the long-term health of the business. So when we're doing M&A, we got to look out 5 to 10 years, and what does the business look like? And if we're lucky, and then silver goes to $50 or triple digits, as I'm suggesting it may, then all of a sudden, it becomes great for our shareholders. Whether it's the paper markets that keep it, down. I have a presentation later today talking about silver, and there were some slides in there that addresses this point. But we trade at 240 to 1 in paper versus an ounce of silver. So for every 1 ounce of physical metal that trades, 240 ounces of paper metal trades daily. And that's pretty amazing. So does that affect price? It probably does. But at the end of the day, these banks that are trading the metal, for the big commercial buyers, the big BMWs, the Teslas, the Panasonics, the Sonys of the world that are consumers of this silver, they have to buy the metal at some point. And when you're running deficits that 300, 400 million ounce deficits every year for multiple years, that's got to show up in price. And I think it is showing up in price right now. This move to over 30, is fairly just really in the last 6 months. And I think people are starting to wake up to the green story. They're starting to wake up to the importance of silver, the fact that it is a strategic metal.
Keith Neumeyer's optimism for silver extends beyond immediate market dynamics. His insights highlight not only the present state of the silver market, but also its critical role in shaping a sustainable future. As the metal's price edges above $30 and garners more attention, there's a growing acknowledgement that silver is not just a commodity. It's a key to future technological and industrial revolutions. One of the most striking aspects of Neumeyer's discussion is his steadfast belief in the inevitable breakout of silver prices. While some skeptics view silver's historical price movements as erratic, Neumeyer emphasizes the broader context of structural deficits and industrial demand. The global supply of silver simply cannot keep pace with its burgeoning demand, particularly as industries adopt green technologies at an accelerated rate. The renewable energy sector, for instance, is a massive driver for silver demand. Solar panels, a cornerstone of renewable energy systems, are heavily reliant on silver. A typical photovoltaic solar panel uses about 20 grams of silver, and as nations ramp up their commitments to renewable energy targets, the demand for silver will surge exponentially. According to a report by the Silver Institute, demand from the solar industry alone is projected to reach 140 million ounces by 2030, up significantly from current levels. When combined with the increasing adoption of electric vehicles, which also rely on silver for their electrical components, the case for a long-term bull market in silver becomes even stronger. What makes Neumeyer's argument particularly compelling is his emphasis on the tangible, irreplaceable properties of silver. Unlike other commodities that can often be substituted, silver's unique combination of conductivity, reflectivity, and antimicrobial properties makes it indispensable in many industrial applications. This scarcity of viable alternatives ensures that silver will remain a critical resource, regardless of price fluctuations. Another crucial point Neumeyer raises is the role of central banks in the silver market. While central banks have traditionally focused on gold as a reserve asset, there's a quiet yet noticeable shift toward silver. Countries like India, China, and Russia have been stockpiling silver, not just for industrial purposes, but also as a hedge against currency volatility and geopolitical risks. The inclusion of silver in their strategic reserves signals a broader recognition of its value as both an industrial and financial asset. The ongoing depletion of silver inventories is another factor that underscores its long-term value. Neumeyer points out that global silver inventories stand at approximately 1.2 billion ounces, which represents only a year's worth of consumption. This razor-thin margin leaves little room for error, especially in a market where demand continues to outstrip supply. The structural deficits that have persisted for years are now reaching a tipping point, creating a perfect storm for a potential price explosion. This supply-demand imbalance is further exacerbated by the speculative nature of the paper silver market. The ratio of paper silver trades to physical silver, 240 to 1, is a stark reminder of how detached the futures market can be from the underlying commodity. While this disconnect has historically suppressed prices, Neumeyer argues that it cannot last indefinitely. Industrial buyers, especially those in critical sectors like technology and renewable energy, will eventually have to secure physical silver, driving up prices as they compete for limited supplies. Neumeyer's insights into the psychology of the silver market are equally fascinating. He describes silver as an annoying metal due to its unpredictable price movements and psychological resistance levels, such as the $30 mark. Yet he remains confident that once silver breaks through these barriers, the ensuing rally will be nothing short of spectacular. This optimism is not baseless. It's grounded in a deep understanding of the market's fundamentals and historical trends. His reference to triple-digit silver captures the essence of his long-term vision. While $100 worth of silver might seem like a distant dream to some, it is entirely plausible when viewed through the lens of supply constraints, rising industrial demand, and the broader macroeconomic environment. Neumeyer's conviction in this scenario is bolstered by the growing awareness of silver's strategic importance, not just among industrial players, but also among investors and policymakers. The discussion also touches on the broader implications of silver's role in the global economy. Neumeyer envisions a future where silver is not just a commodity, but a cornerstone of progress. Its applications in green energy, technology, and healthcare position it as a critical resource for addressing some of the world's most pressing challenges, from climate change to technological innovation. This broader narrative adds a layer of depth to the investment case for silver, making it not just a financial opportunity, but also a bet on the future of humanity. Neumeyer's practical approach to the silver market is another key takeaway. While he acknowledges the frustrations of timing the market, he emphasizes the importance of adopting a long-term perspective. For companies like First Majestic Silver, the focus is on building a sustainable business that can thrive across market cycles. This strategy is evident in acquisitions like Gato Silver, which are made with a 5 to 10-year horizon in mind. Such investments reflect a commitment to delivering value to shareholders, regardless of short-term price fluctuations. One of the most intriguing aspects of Neumeyer's commentary is his differentiation between silver and gold. While both metals have their merits, he argues that silver's industrial applications make it a more dynamic and versatile asset. This distinction is particularly relevant in today's context, where technological advancements and sustainability goals are reshaping global priorities. The conversation about the green revolution and its impact on silver demand highlights a critical point. Silver is not just a passive investment, it is an active enabler of progress. Its role in technologies like solar panels and electric vehicles positions it as a key player in the transition to a more sustainable future. This narrative resonates with a growing segment of investors who are increasingly seeking opportunities that align with their values and long-term goals. In conclusion, Keith Neumeyer's insights into the silver market offer a compelling blend of realism and optimism. He acknowledges the challenges and frustrations that come with investing in a volatile market, but remains steadfast in his belief in silver's long-term potential. For investors, the key takeaway is clear. Silver is not just a speculative asset, but a strategic resource with the potential to deliver substantial returns while contributing to a greener, more sustainable future. As the world grapples with the twin challenges of economic uncertainty and environmental sustainability, silver's star is poised to shine brighter than ever. Whether you're an industry player, a retail investor, or a policymaker, Neumeyer's vision of silver as a strategic metal is a call to action, one that underscores the urgency and importance of embracing this unique asset in the years to come.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.